Welcome to Global FinTech Fest, organized by FinTech Convergence Council of IAMAI and National Payments Corporation of India, presented by Department of Economic Affairs, Ministry of Finance, and Reserve Bank of India, powered by Amazon Pay and brought to you by WhatsApp and Google Pay. Let's commence the panel discussion on India's digital payments future, what to expect in the new decade. It is my pleasure to introduce you to the moderator, Mr. Sandeep Lakshman, Head FinTech, Amazon Web Services. As esteemed panelists, we have Mr. Arif Khan, Chief Digital Officer, National Payments Corporation of India, Mr. Vishwas Patel, Director, Infibeam Avenues and Chairman, Payments Council of India, and Mr. Ashni Grover, Co-founder and CEO, Bharat Pay. Welcome, everyone. Over to you, Mr. Lakshman.
Thank you so much, Javisha. Hi, everyone. I hope you've had a wonderful day yesterday. We've got a fantastic panel discussion today for you. I hope you all got your coffee and ready for a good discussion today. So we're going to first start with Vishwas. Vishwas, you've been in the payments ecosystem for a very long time. It's since 2001, right? And that's when, payments, fintech was not even a word. It used to be called payment aggregators. And you've seen the evolution of fintech through the last 2 decades. So before we start off, where fintech is going, where payments is going for the next decade, it would be good, to see how you have perceived the innovation in fintech that's happened in the last 2 decades.
So, Lakshman, hi, and good afternoon, everybody. My mindset always sees to look at future, but now since we are reminiscing of the past and how it has evolved, so let's start in 2000, right, when the whole internet boom came into India, and digital payments was in its infancy, in a sense that 20 years initially when we started out in 2000, 2001, it was only credit cards that could be used online. And you understand, credit cards in India, India is a very debit society. Jitna paisa hai, matlab utna hi chadar phelaiyenge. So credit card, there were less than 10 lakh credit cards in the market, right? In a population of 110 crores, right? And we were playing with that, such a small market. And debit cards were not allowed to be used online because there was no second factor authentication and people could not use it. So those were the days where the only transactions that we could see when we started off were the NRI gifting transactions. That was the main transactions. So the biggest day in the year used to be the Valentine Day, because Diwali gifts are optional, but Valentine gifts days are not. So those were the days, and then we realized that if debit cards are not going to be used online, and India is a debit society, so how do we evolve? So that's how, working with core banking solutions and other guys, that how can we bypass the card networks to enable debiting a bank account, right? So that's how the evolution happened, where we first tied up with the top 3 banks, core banking solution providers, enable net banking, and we, I mean us builders, can tech process. Those are the 3 gateways who evolved and try to make it alternative to credit cards. So that's how the net banking started, and slowly and steadily connected to over 50, 60 banks, core banking solutions in that decade. American Express was not there online, and we realized that it was the #1 card in the travel and leisure sector. So we worked with American Express. We are the guys who got American Express in the country to start that off. Then a lot of things evolved from 2007 onwards. So after DC was allowed. So if you see, today, India has the highest number of payment options anywhere in the world, right? And throughout 2000 to 2010s, I don't know both, but we are the only guys who are supporting SME, MSMEs in those days. And there was no VC funding available to fintechs on those days, right? Except BillDesk, who initially got funded with SIDBI and Bank of Baroda for this time. So that's how things evolved. And then I remember going to a lot of, say, a hotel here, a Sardar hotel here in Delhi, and telling them that use my payment gateway to collect money. So that Sardar told me, "Oye, tera vanilla ice cream ko main chatunga. I need kasata ice cream." So, what do you mean by that? बोला, तू बैलगाड़ी दे रहा है, आगे घोड़ा कौन देगा? तो घोड़ा गाड़ी भागेगा. So that's how the entire front-end vertical specific platforms for Res Avenue came into being, where a complete booking engine for the hotelier's website along with payments. So SaaS as a word, software as a service, was not evolved during those days. So we used to call it ASP hosted solutions in those days. So that's how we built Res Avenue, then for events, Event Avenue, and many other verticals, because businessmen did not understand technology. They wanted technology to understand their business and do wonders. So just not a payments, but we have to build that front end vertical. So that's how it evolved. And today, where we are, you've seen this tremendous growth, right? And growth today, we did almost 31 billion transactions in FY 2020, right? And the growth has been, and today, RF is here. Dilip has set a target of 1 billion a day for UPI itself, right? So he's already scratching his head, pulling his head. But that's how the evolution is today. And I think we have evolved very well. If you look at, we should be proud that a lot of innovation, a lot of our solutions, be it in vertical specific, complete solutions, or even the UPI, which is a torchbearer for the payment industry now, which is being mimicked and trying to be replicated worldwide. Even the most advanced countries like US, Google is writing to their regulators that we should have something like this. So better of proud achievement that we have achieved in the last 2 decades. Sandeep.
Uh, just following up on that, Vishwas, and actually it is a question for all of you, what do you think is the state of payments? There's so much innovation, like you said, right? UPI was a big innovation, and RF, I'll be coming to you as well on this, but, where do you think we are on the maturity scale for payments in India? Has all the innovation that has happened has been done, or is there more that we can expect to happen in the coming decade?
So I think innovation, we are second to none. The kind of innovation, the kind of solutions, and the kind of money that has gone into fintechs is fantastic. The kind of reach and other things that is there, and I think the regulator and the government, if all the regulations, progressive regulations, be in systematically recognizing the different kind of payment instruments, to setting the process on customer support, to second factor authentication was brilliant regulation and other things which help systemize. So as long as the government and the Reserve Bank of India sticks on doing their core work of regulating and not coming into the market forces of MDR and other things, I think we have been the most progressive on all these aspects. Lakshmi.
So, Sandeep, if I may come in and just add to that, right, and perhaps may represent a little contrarian view. I think if I really look at this, and I mean, I applied two different lenses, right? So one, if you look at it from the lens that, hey, do we have the platforms, and do we have the railroads in place? Which was mentioned, we have a plethora of payment options, and second to none, right? Net banking, AEPS, wallet, cards. I think we have there's a lot already there. Perhaps in the future you may need more payment methods. India is a pretty diverse country with different segments and different needs. So I think there is no stopping over there, and I think the more the better. And then again, you look at it, for what's happened on the government side. If you look at the entire government emphasis on digital payments, the JAM Trinity coming together, Aadhaar coming in, digital identity in the form of Aadhaar. So I think it's a great story. Yesterday in one of the panels where Samir from PhonePe was there, I was really encouraged by that when he mentioned in the last 5-6 months, the majority of their growth has been driven from the tier three sector. The adopters and the small merchants are coming from tier three. I'm sure Ashneer also would share a very similar story. And again, he reflected on the success rate, which seemed to be really high and pretty satisfying, and happy to be there. But I mean, if you leave the statistics and these data points aside, right, and when I really look at it as an individual and look very close, like look around the ecosystem, when I go back home, like for example, my maid or the person who comes and iron presses our clothes or takes away the clothes and delivers and those kind of things, I think there's a lot to be done. I think, let's put it this way, we have a lot of ingredients in place. We have the recipe, but I think someone yet needs to bring it together. It is gradually happening, but there's more to be done. I mean, even today, for example, the other day, I had a puncture and I had to repair my car. I mean, get the puncture repaired, and it costed around 200 rupees. Obviously, the guy did not take any digital form of payment, and 200 rupees, I don't think is a small ticket from an India context point of view. So similarly, there are umpteen number of examples, right, where you can take where the actual penetration of digital payments is really not happening. So we can be pretty happy with the numbers and the growth we've seen of 100%, 200%, and so on and so forth, with UPI reaching 1.3 billion transactions a month. But I think there's a lot more to be done. And I would tend to stick with the point that we are really in the early days. And if I look at both payment and credit, and I really don't differentiate them as two different parts. But if you look at them as two different sprockets of wheel, I think one fuels the other. I think both these ingredients now, these individual sprockets or wheels are there. They need to now start really combining and having that turbine effect right on the ecosystem where more and more people come under the digital influence.
Thank you. Ashneer, I'm going to move to you, and I wanted to get your perspective on this. Now, you're one of the newest entrants into the payment space, and you've grown very fast since you started. So, for folks who don't have the context over here, Ashneer is the founder and CEO of BharatPay, and in June, if I'm not mistaken, you did 3 crore transactions in June, right? Which is massive. And I like BharatPay because when I go to drink chai from my chai wala, I actually pay him 6 rupees through BharatPay. So I'm very interested to get your perspective on this Ashneer. Number one, what's our state, and for newcomers into the market, right? What is it that that's going to be built over the next decade for payments?
Yeah. Well, thanks, Sandeep. You guys on the blog, right? And I think when we have entered payments, the approach to our approach is not to make money on the payments, right? And it's coming from a fundamental belief that the infrastructure cost of payments in India, because of UPI, has been brought so low, right? That even if you make a 10 or 15% margin on that, it will not justify, the business that you get into, right? So clearly, we are not in the business of making a single bit on the payment itself, right? I think moving money from point A to point B has to be done at the lowest cost possible, and therefore I don't see any revenue in payments as such. I think the market is going to shift to very quickly to credit now, right? And it is all about who is using payments smartly to make that switch to credit, right? And even for the new entrant or anyone new coming into the space, I keep telling them that take payments as an infrastructure. It's what you built on that infrastructure which is going to create value, right? So for example, for us, we do $250 million of TPV a month, right? I don't make a single penny of MDR revenue on that, right? Because even if I did, it would not amount to anything huge. What we rather do is create more value and unlock value for the merchant by doing lending to them, right? Because for us, it's simple. I have a proof of the business that flows through the QR. When I have that data, can I use that data smartly to lend to the guy? And I also use his payment flow to service that loan, right? And I see a lot more value creation opportunity there, and going forward, therefore in credit, as against in pure moving money from point A to point B.
Interesting. That's a very interesting point you brought up, Ashneer, and I think I see a lot of going that way, right? So, for example, one of the examples which we at AWS have worked closely with is actually PayU, where PayU wanted to launch their Lazy Pay product, and at that point, this is in 2016, right, when Buy Now Pay Later was just coming up, and they actually we helped them, kind of build this entire analytics layer, which has now become an AI layer for them. They use our AI services. And the most amazing thing was that they use the payment transaction knowledge doing payment transactions and the payment history to make quick decisions, like 2-3 second decisions, right? Whether I should extend this person a line of credit or not. And at that point of time itself, I found it so innovative, because you're making a lot more margin on that credit that you give than on the payment transaction, right? Do you see any more opportunities like this? Maybe, something like getting insurance, and identifying the current insurance to sell on top of, based on the payments transaction that the customer is doing.
Yeah, I think there's a lot to resonate with RF, right? Like, I think we're just scratching the surface even now, even at these huge numbers, right? I think we're just scratching the surface. For example, it's very simple. A shopkeeper today can use any QR to get payment in, right? So I think that problem is solved and is being solved incrementally every single day, right? But the fact that how does he pay his supplier or how does he pay his distributor, right? Can there be an auto pull that the distributor can do and feel more comfortable, therefore supplying on time and as ordered by the retailer is simply untouched now, right? So one of the things that we are working now, which is the second layer, is solving for the payment flow upstream, right, from the retailer to the distributor, and therefore from distributor to the manufacturer. And if we can make a single flow, it just solves for commerce, because the biggest problem any business today has is कि मैं credit दे दूंगा, मेरा पैसा आएगा या नहीं आएगा, right? If that is solved with certain level of certainty, right, the amount of commerce that can happen on back of it is huge, right? I think today a lot of commerce is suboptimal because at every stage the guy is thinking, अरे मैं तो पैसा दे दूंगा credit का, but मेरे को पैसा वापस नहीं आएगा, right? So पैसा वापस नहीं आएगा is the real problem to solve in India, right? And I think there's a huge opportunity there on the B2B side.
Nice, nice. But by the way, for the audience, we will be taking audience questions, so please feel free to submit your questions. Some of the good ones, the top ones, we will be asking our panelists. Please do submit your questions. Arif, I want to move back to you, right? You've been in innovation across multiple companies, right? You've been at MasterCard and Razorpay and now NPCI, right? And Ashni talked about, and by the way, congrats on the launch of AutoPay. That's awesome, UPI AutoPay. So congratulations to you and NPCI on the launch of AutoPay. My question is going to be slightly different, right? My question is more on what are the things that keeps you awake at night, right? What are the things that worries you as we go into the next decade of payments?
So, there are quite a few, and I'll try and be pretty short on this. So I think very clearly, right? And I mean, over the last 24 hours, we've heard the numbers. We've heard people talk about 10x growth, 20x growth, and embedded payments and different flows and so on and so forth, right? So I mean, clearly, one thing that really worries me is something that we actively need to keep working along and keep digging away, is how do we manage this scale, right? We have these great railroads. I mean, imagine if you want to get to 1 billion a day kind of transactions, what's the kind of infrastructure that you require, right? And while building out that infrastructure, you need to make sure that the platform has the flexibility. Ashni mentioned a couple of flows that he wants to look at, which can help him, create a business model. I mean, if we need that kind of flexibility, the scale, the platform creation, investing into that continuously while keeping the costs down, I think going back to the design, it's something that is, something that is always top of our mind, right? As you rightly said, Vishwas was saying that Dilip is pushing us for 1 billion a day. That's not a very simple and easy thing to do. I mean, that's like a 20x jump, perhaps, that we have today. So clearly, that's one worry. It's not exactly a worry, but that's an area which takes a lot of our time and attention. I think we need to make sure that these super highways are really very well maintained, right? And when we talk about these super highways, I think the other aspect that comes into play is that then there needs to be a lot of discipline on these autobahns or these super highways. I mean, imagine if you build a highway which you want everyone to run at 100 miles an hour, and if there is one participant in the ecosystem who is running at 40 miles per hour or 60 miles per hour, is going to have a large cascading impact, right? So collectively as an ecosystem, right, how do we scale up to 1 billion a day is important. It's not just about NPCI. It has to be we as a larger ecosystem come into play, and ensure that we can enable this highway to work very efficiently, right? And there are many ingredients to that. For example, one of the things that we have been talking internally within NPCI and with a few banks and some large partners is that, look, for example, if India really needs to get digital, and there are some different data and statistics available, if you look at retail spends, uh, I think there was a report which mentioned around 55 to 60% of retail spends in India is below 100 rupees. This includes cash, right? So imagine this is you going and having tea, or you are paying your iron guy, presswala, or you buying smokes at the corner shop and paying him 50, 60, 70 rupees. 60% of these transactions are below 100 rupees. Now, if you want to get them into the digital fold, besides the overall capacity that we build, what is it going to do, say, for example, to the banking ecosystem, right? What's going to happen to the bank's core banking? What will it have? Will it be able to manage that? And is it worthwhile for taking this transaction back all the way to the core, decisioning over there and coming back? Do we need a process, or do we need a system in place where someone like NPCI and a couple of other partners come and do heavy lifting and say, okay, can we do something on behalf processing over here? So that the infrastructure that is required at the bank end or at the debit and credit end, if I may say, at where the actual transaction is getting affected, can reduce. So that's another important thing that we need to do. The other important thing is that when you do these super highways, there's a whole lot of discipline, right? The operating guidelines, right? One fall guy, one fall play is really going to slow down the entire ecosystem. For example, if you take UPI, we're enjoying great success rate, but tomorrow for some reason, a particular, because in the case of UPI, the customer could belong to any bank, the acquirer could belong to any other bank, the merchant could belong to somebody else. So it's a true four-party model. So if any of these players come into a challenging situation, what do we do in that? Right? So do we have the optimized solution, the optimized balancing where, the true backups are there in place or not? So that's again something, that's something that is we need to prepare for the future. The other thing which, at NPCI we pay a lot of attention to and increasing focus in the last 1 year is the overall life cycle of the transactions, right? And again, I'll go back to one of the panels one of the panels that I witnessed yesterday. Kunal Shah from Cred was a part of it, and he spoke a lot about people, consumer behavior, and trust. Right. So I'll tell you, something which is very close to me, and like my father-in-law, he had an incident where he used his card, and for some reason the transaction got cancelled. It took him 7 days to get the refund back, and this was a transaction of some roughly around 5 or 6 thousand rupees. Right? I don't think so. In spite of me trying to convince him and telling him all the stories, I don't think so. He's going to come back and going to use his debit card very soon. What it means is that overall, as an ecosystem, we really need to work towards bringing this efficiency in the life cycle. Like for example, even refunds today, what's the turnaround time? Can I get a refund within half an hour, if not instantly? How are we handling, what we call transactions which go into suspense, right? I think these are larger issues which somewhere get understated. But if we really want to grow to that 20x and really become a digital economy, I think we really, really need to focus a lot on that. And if you look at, the regulator and what they've been talking about, and even if you refer to Nandan Lilankri's the deepening report, right? There's a lot of emphasis of online dispute resolution. And as I mentioned, it's a little bit understated, I think. But if we really need to build that trust among the citizens, right? Imagine this, right? In this entire COVID pandemic, where we had the entire migrant issue and so on and so forth. Imagine one poor person has got DBT of say 1,000 rupees into his account, and he walks across and tries to use his card or some payment method, and his account, the money gets debited, but he's actually not got the service, and the refund takes 4, 5, 6 days. Imagine what would happen. Do you think this person is ever going to come back and try to use a digital payment? He's certainly not. For him, cash will continue to be the king. And if we really want to solve at that, besides building great experiences and technology, I think a whole lot of attention needs to be given to this entire life cycle management, right? We can call it life cycle, you can call it dispute management. They may be just 2, 3% or 4% of the transaction base. I really don't have the exact figure, but I think it's a very, very important aspect. That's a concern area, as and something that needs to be done terribly fast on that side. The one more thing, which thanks to GFF I learned yesterday. I don't think we as as the technology community in the country or building new solutions are giving that much emphasis on consumer behavior, right? For example, and I actually after I heard the conversation yesterday and I was looking out, since I live in Bombay, I was looking for a Marathi payment app, which is the local language in Maharashtra. I just couldn't find one. So I think there's a lot of emphasis that needs to be given on the customer experience, where they're comfortable, what are they comfortable with, right? So these are things that we really need to think. A lot of it has a direct role for us as NPCI to play, and then there is a larger participation of the ecosystem that needs to come together and actually solve for all these kind of things, right? And unless we don't do that, I don't think we can really go to a billion a day. I think the scaling and this needs to go hand in glove.
You should definitely speak later more on scaling. We're happy to help our end whatever we can as AWS. We're definitely happy to help over there. So we have this fantastic case study also, where we talk about Razorpay and when the demonetization happened and how we helped them scale up during one of the fastest growth periods, right? I want to quickly come back to Vishwas. Vishwas, I wanted to get, Arya spoke from, NPCI point of view. I wanted to get, from your point of view as one of the biggest payment providers there, and also as a chairman of PCI, right? What do you see are two questions. Number one, what are the biggest challenges that you see, biggest blockers that you see? Number two, when are we going to have newer form of payments, right? Are we going to see embedded payments in the future soon? If so, when?
Okay, so look, today we already had a 31 billion transactions in last year, right? And highest number of payment options is already there, right? So we are also the one of the most evolved as far as technology is concerned. So first, I'll just go to the point of making money in the payments, which comes in, which Asneer has raised, and others also as we scale up. So now, how we see it is that yes, money still needs to be made on the payment options, on the payments. Why? Traditionally, because there is still a cost attached to it. You cannot give a credit card free of charge at 1.8% when the MDR interchange is there, and you cannot always fund that with say getting money from the private equities or trying to make money on the lending part, because there is a cost of the payment transaction, there is a cost of deployment, there is a cost of putting up the technology, and there's a cost of servicing. So our take is that we have to run on all the 3-4 pillars. One pillar is always definitely on the payments. There has to be a charge MDR mechanism where you can't always do business turn to subvent somewhere and earn somewhere. Even if you see in China, both Alibaba and Tencent have made a closed ecosystem where a good percentage of their money is coming in from the MDR that they are charging for their own from left pocket to right pocket that they are earning. Right. So that's one pillar. Second pillar has always been technology traditionally that we have worked. If you see the technology piece, am I audible? Hello. Okay. So from the technology piece, if you see, traditionally, even from Res Avenue, Event Avenue, to even building the entire government procurement, entire central government procurement, the GEM platform, the government e-marketplace, where around 7 lakh crores a year of central government procurement is going to go through that platform. The entire technology and platform is built by us. Right. So the entire platform that you build, the technology, including the Res Avenue systems that we built for hospitality or the event management for Event Avenue, technology along with payments is always going to be there. So that's always going to be a traditional system, be it for your services or some other features like invoicing or SMS or WhatsApp connection, any other things. So you make from MDR, you make from technology, then you can make from lending. That's how even all the payment guys are going to evolve, because you want to grow the transactions, you want to help based on the good data that you have of the merchants, right? And traditionally, our credit scoring systems is still not evolved. It still works on the very safe kind of a mechanism where you can't go and give out a Friday payouts or something on those lines. So to evolve on that, rely on that kind of a data for even a salaried guy or even for a small entrepreneur who needs just 200 rupees to buy his bhaji and pay back in the evening 250 rupees so that he can do his day's volume. That lending is going to always be there, and that's what everybody is getting in, and we are there, right? And always the last pillar has always been cross-sell. cross-sell to the merchants, be it financial products or other things. So income should be for there. I don't see any reason why we should supplement one and take on the MDR cost one from other. There might be business models, they might be scaling up, because in this world, you say free, then you get everybody. Like even when the government made QR code free, our argument to the finance minister was, okay, UPI free, who's going to go and deploy? Merchants will want it free, but who's going to go 100 kilometers outside Guwahati and then keep doing and servicing, put up a deployed POS terminal for RuPay debit card processing? Who's going to put up a POS terminal there? Because the growth will be limited to those guys who raise the money to try to get the transaction. But on a vast majority who's already there, it's going to become an extremely difficult thing. Because so many job loss and other thing is there. So you have to have a four-pronged pillar to grow. Now, going forward on the evolution and other things, Arif very rightly said that we are just scratching the surface. Asnir also said that we have a lot of way to go. I agree with that totally. Today, what is commerce? Any product or services sold and payment made, that is commerce. So for that payment made, that is there, we have to get in. Right? How do we get in? How do we build different kind of solutions to, even if you have to pay his kamali bhai or you're paying a chai wala, or different mechanisms for B2B payments, corporate payments, we have to be there. So if you see the whole stacks that are that are being built right now, be it the India business stacks that have come in, or if you have seen the say for even the bill payments, the BBPS stack that has come in, which NPCI has put in, or if you look at the threads where you have to, where someone is sold and you can do a invoice factoring, the threads thing has come out, or see how different to make things easier, the account aggregation that Mr. Nandan has put up, or now the new lending aggregator platform, which makes it easy to give out lending. So these are the platforms that have come in. We have built GEM for the government procurement, Res Revenue for almost 2,000 plus hotels who are using it, and then taking this technology worldwide to so many other countries also. So the idea here is that all the four pillars should keep going on. The future is going to evolve. Future, we have the highest number of options today, but if you see on a very, very macro, when you look at that 1 lakh feet level, today there is credit, there is bank account, and there is cash. We are, since a debit society, lot of revolution has happened on debiting a bank account. So you can debit it through credit card, through a debit card, through an ATM, through a check, NEFT, RTGS, IMPS, UPI 2.0, BHIM. So you're all giving a convenience, a different way of putting a tag to debit a bank account. Credit is now started evolving. Today, credit has been given on many other factors, on payment data and other things. Still, the next decade now belongs to credit. How we can revolutionize that? But my worrying part is on the last part, that is cash. Today, 22 lakh crores of cash is back in the market, right? And that part, how do we disrupt, right? That is there. So what will happen going forward in the next 10 years is that how today the entire cost will disappear, right? The entire thing, a merchant wants to start accepting payment, just download the app from a Play Store or a app on the phone, NFC card transactions will go through. So POS will disappear, right? And anybody can be a buyer and seller with an app. So that's how the whole world is going to reform. Definitely, of course, we are going to have our more card schemes with the new retail payments they have put in. So finally, after so many years, we should be proud that we have our own RuPay, which is a card network. Very important. One of my biggest asks from 2003 is that we don't want the rules and bylaws of card networks to be, dictated by an office in purchase in New York or this thing. So now we have our own card network with our own people managing and decision taken from BKC rather than coming from US, dictated from there. And it was a very necessary stop in our Atmanirbhar strategy of the government, because you have seen history, like even if you have seen how what had happened in Russia, right? When Russia annexed Ukraine, some part, the Crimea part, and then Obama in his White House just said, okay, master visa, this thing sanctioned. So overnight, all those master visa ATM cards in the Russia stopped working, and there was so much this thing. So that gave a lot of things that we cannot rely on international card schemes to run our domestic payment options. So RuPay was good, but now I think RBI is opening up, and I think the next 4 to 5 years they have Master, Visa, MX, Diners, Discover. You'll also have RuPay, India Pay, GoPay, whatever the names are. So some competition for Arif and team might be coming up in the next 10 years. So, and a lot of innovation you guys will get in. So we see a evolution on that way. And I think a good functional strategy is that you put on 4 pillars. Someone can pick out one pillar and to grow faster so that, free always work. If you have heard that dialogue in Three Idiots also, free. Even a guy who's unconscious wakes up, free ho gaya to. So it works. But Asnir, my take always is that there's since still there are a percentage on credit card of 1.8%, and you try to match it with this thing, lending. Somewhere down the line, lending is not easy. What we have understood, what we have done right now, when we have started lending, the collections is a big pain point, which you rightly pointed out, and not very easy to scale up a lending to 200 crores a day or 100 crores a day, right? And the credit mechanisms, the recovery mechanisms, and even the press plays a very pivotal role where the guy, when he takes the money, is very okay, but when we ask to go back, suddenly he has 1,001 problems, and we are always the loan sharks, and we are always the villains in this whole ecosystem. So we need to master that. Lending is a fantastic initiative because I think to push the GDP by another 2.5%. I think if the lending mechanism where we can empower all these SMEs and MSMEs to have a faster growth churning, because you've seen a typical agent when we are doing this lending through instant payouts, what they used to do 40,000 a day, if they're getting credit instantly in one hour, now they're able to scale it up to 1 lakh a day because they're getting instant payouts and other things in a form of lending. So these are the things that will keep growing, and I think lots of payment innovations will happen. And as I said, overall, we have just scratched the surface. It's only 12% of which is digitized right now, and with the government push, with all our intellect and good funding also backing coming from all over the world, I think we can expedite this growth and reduce this from 12 billion, 12% of the economy to almost at least 30, 35%. That's what we should try in the next decade, because we will truly never be a cashless society, but we can definitely aim to be a less cashless society. That's my take.
Hey, Sandeep, just one clarification to Vishwas, right? And thanks for backing us up. Vishwas, one thing, the decisions are not BKC ecosystem, right? It's for ecosystem, made by ecosystem, and decision by ecosystem. That's Rupe.
We know where the push comes in, okay? So anyway, we'll let it.
Thanks. But if I may add, Sandeep, I think there are a couple of other things, really on the solution and technology side, which we are very gungu about, right? And obviously, contactless is one of them. And with this pandemic, I think a lot of people are looking at that. And the other one is, for example, big marketplaces like Amazon itself and so on, Flipkart and all those. I think you'll have a great number of data on card on file, right? I'm yet to see a complete statistic as to what's the total number of card on file across all these big players. But I think the ability to tokenize that also would catch up very soon. And I would really like to think that, from a tier 3, tier 4, I mean, tier 3, tier 4, India is really taken up to, the WhatsApps and the chat, different social media than the chatting, right? I'll give you a very simple example. During the lockdown, and my building was under quarantine at that time, and we were ordering for a local kirana shop, and this guy was flooded with a lot of orders, half shuttered down, and less people serving and all those kind of things. So whenever we called him up, he said, "ठीक है, आ जाएगा, आप WhatsApp कर दीजिए जो भी आपका order है," right? So we were WhatsApping him the order. The question that I had, it could be WhatsApp, it could be any chat, right? I'm not particularly talking only about one particular platform. And then he needs to generate something which is the bill, right? And send it to us so we make the payment. Now for that, he goes to a different device, or he goes to something else, or goes to a different channel. I think if he can initiate the payment or request from there itself, or the invoice, which we can fulfill it there and there, I think would be very powerful. And some of these platforms that have come up, people have really, really accepted it. I mean, like, everyone knows how to use these chat platforms. They're so intuitive, they're so simple. So I think embedding payments within that, for at least micro payments to start with, I think would really, really give it a great push. So I think these are a couple of other things that we should really look forward to.
Thanks. I just got a notification that, sorry.
I was hoping someone like Ashnir picks up some of these cues and starts building them on the edge, right?
Yes. So I'm going to come to one point here. We got 6 minutes. We just got 6 minutes left. From the audience, we got multiple questions on credit, that Vishwas you spoke about, right? And one of the things which has specifically come up is Nandan spoke about the open credit protocol, right? So how do you see open credit protocol helping customers? How do you see, new products being built on that, and how will that benefit the end customers? So this is a question for all of you. And Ashnir, given you have actually mentioned that you're looking to build payments as a layer on top of which to build lending, I'll first go to you on this.
Yeah, I think it's a good initiative. End of the or the only thing we know about anyone is by taking his PAN number and doing a bureau pull, right? But that's just a single dimension, right? Everyone has that data, right? So today, any NBFC, any bank can pull from the bureau, but everyone has the same data. So how do you become smarter about lending to the customer or to the merchant is a problem to solve. And I think what Nandan is alluding to is a good initiative, and it should actually broaden the data points for lending much wider than just credit, right? For example, even we have given 40,000 odd loans. The challenge comes is half the people will be new to credit, right? Now, what do you do there, right? Do you treat those guys as good guys by default and we don't know how they will perform, or do we treat them as bad guys and say ये तो default कर देंगे because इन्होंने पहले loan ही नहीं लिया, right? So I think anything which expands the market, expands ability to underwrite and gives additional data to the underwriters is a very welcome step, and I think it should really pick up.
Vishwas, your thoughts?
I think anything that makes it look, the lending ultimately is going to be it is the risk that one carries who's going to be on the forefront who actually going to give out the lending part, right? So whatever data sources, whatever convenience factor, the platforms that the one that even Nandan described yesterday in his talk is brilliant initiatives. In a sense, it helps a lot because common problem that we see apart from the credit worthiness that we can get from the payments data to a lot of other sources, be it Chrysler or other places that is there. The other sources is how fast we can give it out. There are many loans that can be sanctioned instantly, be it salary loans and other things where the corporate is backing and other things. So the biggest problem that we face is again that KYC that we face. So even on merchant onboarding yesterday, we came out with a report for RBI where we said that what are we doing as a payment aggregator? We are taking money from a customer's bank account and settling into the merchant's bank account, right? And for a merchant's bank account, the bank is doing all the KYC because nobody can open a bank account. RBI has put up a plethora of regulations on the bank where you have to now even do a yearly AML check and other things also, right? FACTA check and you name it. Like the bank is already doing it, you expect same the payment aggregate and delay. So today, the biggest problem which we all, like me, Asnir, and other people in the ecosystem are playing is to grow the acceptance base. The issuance part is sorted today. Today, if you see with 500 million UPI, 550 million rupee debit cards with the Jan Dhan Trinity Yojana that we have, which NPCI has locked out with the other debit cards. So today, anybody can walk into a bank account in a bank and open a zero balance bank account and get a debit card or a net banking or a UPI free of charge, right? But it's the acceptance problem which is a more thirst. And the acceptance problem is one, definitely we will go across and put up these machines, but the biggest problem that we are facing and which you have highlighted to the government is the taxation part. If you don't give benefits to the merchant in the taxation benefit, he's not going to take credit, he's not going to take accept payments. Because that's the biggest problem right now because अभी क्या है 1,000-1,500 रुपया दिन का कमाया खाया पिया भूल गया, right? For the merchant. So for the merchant to take a credit in the formal economy or to do accept electronic payments, the biggest problem we are facing is the mindset. Okay, I don't want to file GST, I don't want to pay any tax, I don't want to come in the ecosystem. That's why we have so low number of income tax numbers that are given out in the country. So for that, just like how a South Korea or a Sweden did, where they gave tax benefits if they accept electronic payments or they take credit in the formal economy, it works wonders. But instead of focusing on their payment option free kar do, UPI ka, that's how the finance minister is thinking. So my fundamental discovery that this is what we need to done, and any kind of the solutions and services that helps is in giving out it, because credit is the next real thing that needs to be disrupted. Bank account is done, credit is what we should be focusing in all 10 years and make sure we all work together to crack it.
I agree. So we are all out of time now. I from the host that we are out of time. But that was a fantastic discussion that we had. So just to add one, one point of view from our end, right? What we have done. So we had one of our customers called PaySense, and what they did is using AWS. We have a graph database called Neptune. They actually created a graph of 350 million Indians, and they used AI ML on top of that to identify fraud rings, which actually helped them give better lending. And I think why I'm bringing this up is something like that is possible when you have an open credit network, right? Yes. Otherwise, we are out of time right now.
So Lakshman, that surely helps. As I said, today, what I see most of the startups are doing is that putting in technology for disbursements. Disbursements, you do AI, ML, all those things are very easy to pull data from here and there. The biggest problem, as Asneen pointed out, is collections. Collections is what needs to be sorted, right, Asneen? So, as I said, when you go to collect, all the problems of the world, the person who has taken money comes up with, and then we become the loan sharks and become the villains. That's a big problem.
Which was for your small loan collection, UPI autopay should help.
If they are willing to pay, that's the problem. They are not willing to pay. That's the problem.
You take it in the same flow, right? You take yeah, I'm sure there's
okay.
All incoming, no outgoing.
Yep, I think that's totally right. And thank you so much, Vishwas. Thank you so much, Arif. Thank you so much, Ashri. That was a wonderful panel discussion. I hope everyone had a great time. Javisha, I give the floor back to you. Thank you so much for hosting us today.
Thank you,
everyone.
everyone, for being with us today and sharing the valuable insights. I'd also like to thank our valued partners, National Payments Corporation of India, Amazon Pay, WhatsApp, Google Pay, Visa, and Amazon Web Services. Ladies and gentlemen, please do visit the booths in the 2 expo halls that we have. We'll now take a short 10-minute break before we get back to the next session. Thank you, everyone.